You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday, 25th day of August, 2025, and the last trading week of this month. Next Monday is a holiday, Labor Day. And then we, what do we got after Labor Day? Seems like we got some holiday, and then Thanksgiving, and then, of course, Christmas and New Year's. Is it Veterans Day? Oh, I think they stopped making that a market holiday. Anyway, I'm sure you have a calendar. We'll all figure it out together. Thanks for joining us today, whoever you are, wherever you are. We're always glad to have you right here, right now, at this time. We do 2 live broadcasts every trading day. The first one, that's our live training room. So to get in there, you got to be one of our traders or taking the 1-week free trial. If you've not taken the 1-week free trial, when Michael joins us in about an hour, he'll walk you through step by step how to take the trial. There's no credit card required. Take the trial today. We'll get your indicators up in indicating today. Your trial will officially start tomorrow morning, and it'll run all the way through next Monday. So you get 5 consecutive trading days no matter when you sign up for the trial. Weekends, holidays don't count against you. Oh, and since next Monday's a holiday, I guess that would be through next Tuesday. That's a pretty good deal. Now, when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and come back for this broadcast, the noon broadcast, which is open to the public. Everybody everywhere on planet Earth with an internet-connected device. There's 2 different ways to join this afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com, scroll down the page to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before this broadcast starts. In that email, there'll be a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it'll automatically log you into our platform. The benefit there is you'll have access to the question box, so you can ask questions and participate in the discussion. Of course, there will be days you're out of the office, away from your desktop, but you still want to join live. And there'll be days when you're busy and can't join live, but want to catch up later. You can do both of those via our YouTube channel. It's easy to remember. youtube.com/CFRN. Christian Financial Radio Network since 2005. 20 years. You don't have to remember all that. Just remember youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right this very minute, simulcasting, we also archive each and every daily broadcast. Currently, there's over 2,800 daily episodes archived for your educational and viewing pleasure. And if you're new to our neck of the woods, it's a great way to get to know who we really are. In fact, thanks to the power of YouTube, you can actually see how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, nor do you need to, but it is a great resource to have at your fingertips. And again, it does allow you to see how we've evolved over the years. youtube.com/CFRN. This is our schedule for each afternoon broadcast. Top of the hour, Michael will join us for a recap of what happened in the live training room this morning, then a little live trading on the TradingView platform. But for now, we'll start where we always do with our daily devotional. And the topic we're on right now, we're in day 3 of 7. Living large in a small world. Today's scripture, Philippians 1:12 through 14. I'm going to share it from the NIV translation. Once I take care of this background noise issue, hang on. Okay, problem fixed. Odd problem, but I won't go into it. So our scripture today, Philippians 1:12 through 14, from the NIV translation. Now I want you to know, brothers and sisters, what has happened to me has actually served to advance the gospel. As a result, it has become clear throughout the whole palace guard and to everyone else that I am in chains for Christ. And because of my chains, most of the brothers and sisters have become confident in the Lord and dare all the more to proclaim the gospel without fear. Again, Philippians 1:12 through 14. So as we talk about living large in a small world, recognizing the opportunity. The apostle to the Gentile world has been rendered immobile. That's fancy speak for Paul is in chains. But that didn't stop him from preaching. His testimony comes up repeatedly in Acts because he was never hesitant to tell it, especially to rulers, administrators, and guards. The same company he was now keeping in his confinement. His wretched circumstances had become a platform for reaching people who were otherwise isolated from the gospel. Paul flipped the script of the idea of a captive audience. The captors became the audience for a man on a mission. They thought they had him, but he had them. These captors in Rome may have been of particular interest to the Philippian believers, as Philippi was a community where many soldiers who had once served in the Praetorian Guard had retired. Any Philippian Christian who was a mother, father, sibling, aunt, or uncle of a current guard would have wanted to know that the gospel was reaching their ranks. And by Paul's own account, it was. The testimony created by the apostles' suffering was spreading. It served as a demonstration of the bigger picture, an example of someone so rooted in the eternal realm that temporary captivity becomes yet another stage for the divine drama. If this guy is so unrattled by his situation, guards and officials must have thought, if he's so convinced of this Savior he keeps talking about, maybe, just maybe, it's true. His adversity has become an opportunity. We need to capture Paul's persistence and his perspective. In his world, believers in Jesus were a marginalized and tiny percentage of the population. Yet he was encouraged by the advance of the kingdom. In our world, more than 2 billion people claim the name of Christ. Yet many believers grow more discouraged and defeated by the day. Paul envisioned a kingdom steadily growing towards ultimate victory. Somehow we've gotten the impression that we're losing the battle and headed towards some godless domination. The difference in visions is stark. Paul would not be looking at today's world the way many of us do. Take your cues from Paul. Re-envision adversity. If he prioritized self-preservation or a personal agenda, he would have already lost. The situation would have rendered a devastating verdict. But with Christ as his priority, he couldn't lose. His vision thrived because Jesus was still alive and active in furthering his kingdom. Nothing's changed. Jesus always has been and always will be alive and active in furthering his kingdom. If you've staked your grand vision for life on that truth, your vision is invincible. You can't lose. God will make every pain and sacrifice fruitful in the place you offer it. Let's pray. Heavenly Father, thank you that even in trials, your gospel goes forward. Use every challenge in our lives to point people to Jesus. Give us courage to speak your word boldly, and let our faith inspire others to trust in you. It's in Jesus' name we believe and pray. And everybody said, amen. Amen, and happy Monday. Hope you had a great weekend. Let me give you the numbers here from around the world. We'll start in the U.S. with the cash markets, or the indices as they're called. Currently the Dow's up 235 points. The NASDAQ is up, the Dow is down 235, the NASDAQ is up 66, S&P 500 is down 3, the Russell 2000 is down 11. We get to the charts. If that sounds like quiet and flat and quiet, yeah, you nailed it. All right. You'll see it on the charts in a few minutes. Crude oil, on the other hand, is up $1.25, trading 64.91 last. That's a gain of almost 2%. Gold is down $1, trading 34.1750 last. Silver's down 28 cents, trading 38.77 last, still above that $38 mark. In the Asian markets at the close, the Nikkei posted a gain of 174 points. The Shanghai rose 57, and for the Shanghai, that's 1.5%. The Hang Seng gained 490 points, almost 2%. And in the European markets at the close, FTSE up 12, the DAX down 89, CAC down 126. Now, we know about the incredible rally we had Friday. And I mentioned this on Friday, that the Asian markets would not have a chance to actually react to Jerome Powell's statements till the open last night. I think that's why we had a green day in Asia. Pretty strong green day. It was a mixed day for the UK, and it's a mixed Radio Monday here in the US of A. With futures, we like to see the four major indices all the same color. That's when you get better follow through on your trades. We don't care if they're all red or all green, we just like them to be the same color. Because with futures, you can be long, short, long again, all in the same hour if that's what the chart in front of you is telling you to do. But it's when there's division among those four major indices, that's when you kind of get that tug of war. So we'll see if the NQ joins the ranks of the red or vice versa by the end of this broadcast. Ismael El Mayo Zambada is expected to plead guilty today in a Brooklyn courthouse to federal drug, money laundering, and weapons charges. The 77-year-old drug lord co-founded Mexico's Sinaloa cartel alongside Joaquin El Chapo Guzman. Prosecutors have characterized the Sinaloa cartel as the world's largest drug trafficking organization. In the early 2010s, the group was believed to control 40 to 60% of Mexico's drug traffic, earning as much as $3 billion annually. It is the leading exporter of cocaine and heroin to the U.S. and fentanyl, largely responsible for fueling the opioid epidemic that has killed hundreds of thousands of Americans. The group also engaged in kidnappings, assassinations, and torture. Zambada was arrested in El Paso, Texas last year after being brought to the U.S. on a private plane. He says he was kidnapped and betrayed by one of El Chapo's sons. The group has since devolved into factions, with violence in the Mexican state of Sinaloa surging to its highest level since 2008. But the president says she's got it. See, she doesn't want any help. President's offered help. He goes, I can come down and we can clean this mess up in a few days. She says, oh no, I got it. As her people continue to die. Kind of like these blue cities and blue states here in America. Well, for all you Burning Man fans, you know it kicked off yesterday. Beginning the 9-day gathering in Black Rock Desert, which is about 120 miles north of Reno, Nevada. Reno, that is some beautiful country. Its name derives from the week's main event, where a 40-foot tall wooden man atop a 30-foot structure is set ablaze, hence the name Burning Man. The event first started in 1986 and draws tens of thousands of people annually to a 7-square-mile temporary city in the desert. Attendees, calling themselves burners, adhere to 10 community principles, including radical inclusion, self-reliance, and decommodification. Campers can opt to stay in themed villages. Vending is banned, so there's no merch being sold. This year's theme is Tomorrow Today, with the venue showcasing tech-forward art installations. More than 70,000 people are estimated to attend, with participants paying a sliding scale of, get this, $550 to $3,000 per ticket. The festival did not sell out this year, and they lost money last year, raising concerns about its financial outlook. Yeah, free don't work, does it? What an incredible microcosm this is of capitalism versus socialism. On one hand, you're pricing tickets to a point where you can't sell them all, but there's no merch sales. Stuff people can actually afford, like a $30 t-shirt, which is grossly overpriced, but at least it's something people can afford. But we'll see what happens next year. There may not be a Burning Man, unless some tech billionaire swoops in and says, oh, I'll just underwrite the whole thing. Maybe Kamala could raise some money for it. The 10th test flight of SpaceX's massive Starship space vehicle was called off last night, just minutes before the launch window was set to open, with company officials citing an issue with ground systems, typically referring to the launch infrastructure, not the rocket itself. The next launch window is yet to be announced, but is expected within the week. The flight will be the fourth of 2025 as the company seeks to accelerate its flagship space vehicle program. Each of the previous three ended in failure, and a fourth rocket exploded in June during a fueling test. Progression of the Starship, designed to carry up to 100 people on long-duration trips, is central to CEO Elon Musk's vision to colonize Mars. The test flight comes a few days after SpaceX successfully launched the eighth experimental mission of the U.S. Space Force's secretive X-37B vehicle. The uncrewed spaceplane is designed to spend multiple years in orbit and has logged 1.3 billion miles traveled to date. Wow. So he's definitely got it right on one hand and not so much on the other. All right, what do we got for Wall Street news? Do we have any? Let's see. Thought we did. Did a minute ago. What's up? Must be due for a reboot or something. Looks like it's gonna load. No, then it doesn't. Yeah, let's see if any of them are gonna load. No, this one's trying to. We talked last week about President Trump's executive order to allow private equity and cryptocurrencies into retirement plans. Retirement savers are eagerly anticipating the arrival of private asset investment options. Nearly half of investors participating in 401k and similar workplace retirement savings plans say they would invest in private equity and private debt if their plan offered them. Now, this is according to an investment manager U.S. retirement survey done by Schroders back in 2025, which provided an exclusive first look at the report to Yahoo Finance. Demand for access to private markets is on the rise among Americans who participate in employer-sponsored defined contribution plans. Private assets, including private equity, venture capital, hedge funds, and real estate, are already legal in retirement accounts. However, plans have been slow to adopt them, and many workplace 401k administrators aren't up to speed on them. That's where President Trump's recent executive order comes into play. The directive instructs the Department of Labor and the Securities and Exchange Commission to draft guidance for defined contribution plans to incorporate these types of investments. The challenge will be finding the proper path to create investment options that can meet the fiduciary requirement plan providers must adhere to, such as acting solely in the interest of the participants and their beneficiaries. Yep, I'm thinking I need a reboot. I'm not going to do it now. We'll just work with what we got. With U.S. debt above $37 trillion and climbing, the U.S. Treasury market is eyeing stablecoin issuers like Tether and Circle as key buyers. Wall Street's explosive adoption of digital tokens pegged to the U.S. dollar have been fueled by the recently signed Genius Act, which established guidelines and a landmark framework for the industry. In terms of U.S. President Trump's aim to make the U.S. the crypto capital of the planet, a well-regulated stablecoin market could cement the U.S. dollar dominance in the world of digital finance. Under the new law, stablecoin issuers have to back tokens with dollars or other high-quality liquid assets, effectively positioning short-term T-bills as the collateral of choice. Whoever thought crypto would send bonds higher? Interesting. From Bloomberg, oil advanced, solidifying gains from the previous week as a move above key technical levels helped extend a rally sparked by signs that the Federal Reserve will resume cutting interest rates. I can't say it enough. It was a definite maybe at best. So, I hope no one hopes more than I that we get an interest rate cut. And I'd love to see more than 0.25%. I'll be tickled pink with 0.25%, but or 1/4 point. But I would hate to think he was just dangling a carrot. West Texas Intermediate climbed as much as 1.7% to its highest level in almost 3 weeks, while Brent surpassed 68 a barrel. Fed Chair Powell on Friday signaled in a speech that the central bank could cut interest rates as soon as its September policy meeting. Comments boosted crude futures on expectations that a rate cut would boost the U.S. economy and raise oil demand. And if we do get the cut, that is exactly what will happen. And for all the Apple fanboys and ladies, Apple made a big splash in 2017 by introducing an all-screen iPhone with a notch and no physical home button for the 10th anniversary of the iPhone. The company is now preparing to introduce another major overhaul for the iPhone's 20th anniversary, featuring a new curved glass design, according to Bloomberg. The iPhone 20, set to be launched in 2027, will have curved glass edges all around, likely to suit the new liquid glass design philosophy of iOS, according to Bloomberg. The publication's report also noted that before the 20th anniversary iPhone's release, Apple will launch its first foldable phone in 2026. That's next year. It said that Apple is in the process of switching screen technology for its upcoming foldable, which might result in a display that hides the crease very well. I've never played with one of those phones. If you have one, you like it? It looks cool. I just don't know how practical it is. Anyway, Logic 247. That's our 24/7 around-the-clock E-mini alert service. Now, we're currently in week 369. Last week was week 368. Last week, we issued a total of 55 alerts. 9 never triggered. So that gave us 46 actionable alerts, of which 4 or 9% would have been stopped out based on simple market structure and a very simple process that we teach all of our passport holders. We're now in week 369. That began last night at 6 p.m. Eastern. Over the last 369 weeks, we've issued over 20,350 individual handcrafted alerts. I think we're closing in on 20,400. Since the market opened last night at 6 p.m. Eastern, Valerie did the recap this morning at 6:30 a.m. Eastern, so I'm sure some of this has changed. But at the time she did the recap, 14 alerts issued, 12 waiting. I haven't issued anything additional. 2 actionable alerts. Nothing stopped out so far. It's early. Now, how is it possible that our 14 alerts, we only had 2 actionable last night? Well, I'm getting ready to show you, because the market went nowhere. Now, the purpose of the logic alerts is to teach you how to read a chart. If you're not using them for that purpose, you're kind of wasting your time. Yeah, you can trade them and make money, but the real purpose is so that you learn how to read a chart. The logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. as opportunity presents. Futures trade around the clock. We have traders around the globe. Our day session is their night session and vice versa. Now, 369 weeks. We did the math. That's a little over 7 years. But long before, years before, we had Logic 247. We had the concierge trade alerts. They're different in a number of ways. Number one, they don't come out around the clock. They're typically posted 5 minutes ahead of the Globex Open. So the new week, the Monday session, started last night at 6 p.m. Eastern. 5 minutes ahead of the Open, all of our members and trial members had all of these targets: S&P 500, the Dow, the Russell, crude oil, the NQ, gold, and silver. And we have rolled silver to the December contract. Okay. And because we're entering the month of September, we'll soon be rolling the indices as well. We'll keep posted. So, this is the daily chart of the bellwether, the S&P 500 E-mini futures. We have had one heck of a rally. Started way back here, April 7th. Had a leg and a retracement, and then we had a leg that got us above the VBC. And now price always reverts to the mean. In our case, the mean is green. It's called the BBC. It stands for Bull Bear Cross. You'll notice the pullback to the BBC, whether you're pulling up from below or pulling down from above, the pullback holds more often than it doesn't. As it did here, and as it did here. Okay. Now, both of these look like a prime opportunity for the markets to take a deeper retracement. To keep a market healthy, you need deeper retracements. This is the shallowest possible Fibonacci retracement over here, 24, or the 23.6 for you purists. It's just easier to say 24. Now that's down at 61.24. The all-time historic high is right here, 65.0875. Friday's high was 64.96 and a quarter. Today's high is 64.94. So we never took out, or at least we haven't yet, we haven't taken out Friday's high. We did come down to the top of red and falling. Now when red and falling, it's directly below price, that becomes potential support. When it's overhead, it's potential resistance. Now it's potential support. So we have potential support at the low of today, which is right where red and falling is. And then potential support at the black step line. Then at the daily BBC. And then this little double bottom right here. And then that brings us all the way down to the 62% fib extension. And the next major area for support is the 50% fib extension. Then the 38, and then finally we get to the 24% fib retracement. The longer this thing stays up here, the more worrisome it gets. Because when it falls, it's going to fall. Now, of course, even a 24 would send all the pundits on TV telling you that the sky's falling. What would a 38 do to them? Heads would explode at a 50. But look at where the last bullish cross was. Just above the 62. Huh. Well, what about that? Now we had a bearish cross here that only created resistance for a day, and then we just trucked right through it like it wasn't even there. And this double top up here, this set the stage for, we had weeks, 2 weeks I think it was, of consolidation. We counted them on Friday, between the 50 and the 62, with the 50 being support. And on this last retracement, the 50 served as support, but the pullback held. Now the pullback is held again. There was Friday's rocket ship, based off Jerome Powell's definite maybe that there could be, possibly, potentially, maybe, if he feels like it, if he can find his favorite shirt when he wakes up on that day, we get a retracement. Now, if the market does this at the hint of a definite maybe, my goodness, what in the world could happen if we actually got an interest rate cut? Well, some are going to say now it's already baked into the cake. Okay, maybe it is. I guess we'll have to wait and find out like the rest of the world, because we don't have crystal balls. The vertical line separates today, Monday, from last week, Friday. These are last week's weekly trading zones. The weekly trading zones are issued every Monday morning at 6:15 a.m. Eastern to all of our traders and even our trial members. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. So all of our members got the new weekly zones this morning at 6:15 a.m. Eastern. These are last week's zones because the alerts that went out last night were based on last week's zones. Why? Because the new zones didn't come out till this morning. Okay, you follow me. All right, this was the opening candle last night. Now, this is how flat. I mean, this is just, it doesn't get much flatter than this. We opened right at a weekly trading zone. And in that first 30-minute candle, we dropped down to roughly 64.80, walked sideways until we ran into resistance. That pushed us down to the BBC. We caught a little bounce off of that. And we got back below the BBC. But if you look over here, because of that incredible rally we had on Friday, there's nothing to weigh in as resistance. But buyers found a reason to come in right here. This was the 9:30 open. That's a pretty tiny candle for a Wall Street open. This was the Wall Street open on Friday, and then this was when Jerome started talking. So basically, the market has just gone flat and sideways since we opened last night. We dropped to the zone, and then we've just oscillated at that zone from last week. We got above it, we got below it, now we're back above it. And we're getting a bullish cross here. So we have to take out this area right here, roughly 64.82. And we got potential resistance here at 64.87. And then you get a clean shot from 90, I will call it 91 up to 93. It's enough to give you your goal for the day if we get up there. Where we sit right now, 84. Yeah, 84 to 87. You might write that down. That's a potential 3-point possibility. The Dow. Here's where we opened last night. Now on the ES, we closed well below the highest weekly zone. When we publish the zones, there's always a highest zone and a lowest zone, and then the zones in between. That's not a prediction that we're going to hit the highest zone or that we're going to hit the lowest zone. What we're saying is that we don't believe price will close above the highest zone or below the lowest zone. I think we had one market last week, possibly what happened, or it might have got right back below going into the close on Friday. We're going to run through these, so we'll see. Okay, so this was the close on Friday, so the Dow definitely closed below the lowest weekly zone. This was last night's open. We dropped to the BBC, we catch a little bounce, which lines up with this flat line right here. That sends us down to the zone from last week. When price drops to a zone, we expect support. When it rallies up to a zone, we expect resistance until proven otherwise. As you can see here, support to resistance, back to support, back to resistance, consolidation, down to support, up to resistance. Then we go up to resistance again, and then we get a retracement, and then we punch through on Jerome. So on the Dow's only 30 stocks compared to the S&P 500. And we know the S&P 500 is a bellwether, but they really love to talk about the Dow for whatever reason. I'm talking about the guys on TV. So a 50% retracement of Friday's low to Friday's high would be right here, 45,292. Quite a ways to drop. And this type of a move will almost always get a 50% retracement. So I think your eye should be to the downside. The Russell, kind of the same thing, just sideways. Now we finally dropped below the BBC. Pullback held. And again, I think we had lower till we get to 2324/25. We do have quite a bit of high impact economic news this week. We had virtually no news last week, except for Friday with Jackson Hole. Okay, the open last night on the NQ, first 30-minute candle took a nice drop. We're above the BBC, but we had red and falling overhead. That's an awkward place to be. Red and falling represents resistance, and it pushed us right down to the BBC. Pullback holds more often than it doesn't, so we did catch a little bounce. And then we go back below the BBC. Pullback held. We got another leg that took us down. See, there's nothing here. That's unusual. That throws all technical analysis out of whack when you get something like that. It'll take a day or two for it to get back to its normal rhythm. Red and falling turns to blue and climbing. That gets us above the BBC. Pullback holds. Then we go up to last week's zone, where we've tried for 1, 2, 3 30-minute candles to trade through the zone and failed. Okay. And we have blue and climbing chasing price. So that looks like some pretty solid resistance. And if you see, that carries all the way over to this resistance from Friday and this resistance here. So on Friday, when the NQ blew up, along with all the other markets, where'd we find resistance? At the weekly zone. What about the ES? Where'd we find resistance? After Powell, at the weekly zone. At the Dow, we were basically around the midpoint between the second to the highest zone. Same thing with the Russell. Actually, we were closer to the highest zone, but we never got there. In Q, as you can see, we're dropping. There's potential support here. But again, our traders have this week's zones. And on tomorrow's broadcast, you'll see this week's zones on my chart. Because any alerts I put out today, whether they're CTAs or logic alerts, they will, of course, be based on this week's zones. Again, once they're published Monday morning, 6:15 a.m. Eastern, they're carved in stone for the entire week. So if we got a 50% retracement here, that would put us down here around 2324/25. For some reason, my monitoring browser crashed, but it looks like, yeah, it looks like the YouTube channel's still going on. I don't know what happened. I guess that computer needs a reboot too. All right, NQ. All right, so the 50, 23, 24, 25, look for that this week. It may take a day or two. We'll see. In Q, we got resistance here. I'm not even going to do the 50 on that. Crude oil. We mentioned earlier, crude was higher and gave you the reasons why. We opened last night and just flatlined along this weekly trading zone. And then we finally made a run up to the long target and found resistance. We pull back to the VBC, pull back holes more often than not, like it did here and here and here. Here you had support times 2, VBC and the zone from last week. Now it's still running strong, but notice the step line starting to lean to the right. Once that thing crosses blue and climbing, we'll probably get a retracement back to the VBC. Gold has just been flat. It even got a nice bump on Friday. Since the open last night, just sideways. These are some of the flattest markets we've seen in quite some time. After a wide-ranging day like Friday, it is very typical to have a day of quiet sideways consolidation. I buried the lead on that one. I should have mentioned that first. But historically, that's true. This zone was 39/3901, and the low was 3902. So we missed it by a penny. That takes us through all the markets and back to here, where we failed to take out Friday's high. And we've come down and found support on the top side of red and falling. So we'll see how we close the market today. Okay, Michael is going to give us a recap of what happened this morning in the live training room, then do some live trading on the TradingView platform. I will come back and wrap things up with our good word for the day.
All right. Now, this weekend is Thursday, Friday, right?
I'm sorry?
You're going to be out.
Sorry.
Yeah,
well, I'm definitely going to be out Friday, Thursday. We'll see what time we're planning to leave.
Okay.
Maybe I'll take Thursday too. I was just planning to take Friday, but we'll see what my wife needs me to do to prepare for this
Preparation.
4.5 hour drive.
Yeah, we got another one of those coming up pretty soon too. All right. How's everything look?
Everything's flat and sideways. It's just, it's incredible. Every single market. I mean, we had such a wide range day on Friday. It's typical after such a wide range day that you have a day of quiet sideways consolidation.
It is, and we have a lot of big news coming up over the next week and a half too.
We do. We got a lot of high impact econ news, and I drew 50% fibs on most of the indices. And after a big move like we saw Friday, you would expect a 50% retracement. And so we got quite a bit of dropping to do to fulfill that. Okay, so there's no law that says we have to fill that. It's just historically what you see. Yeah, it's what usually happens. So anyway, your screen looks good.
All right, here we go then. Good afternoon, everyone. Today is Monday, the 25th day of August, 2025. Now, if you have not taken a free trial with us and you want to, go here, mytradingiq.com, click on the purple button. There is no credit card required for the trial. Click on that button, into this registration page. Just fill it out down here at the bottom. Give us your TradingView login ID. Once you give us that TradingView login ID, we'll be able to get your indicators indicating for you. Okay. You really want to do that. If you're going to take the trial, you might as well have the indicators, right? It's not really much point in taking the trial if you're not going to use the indicators. And you do have to get them on TradingView. I mean, you can get the limited set that we have on NinjaTrader if you want to, but TradingView is really where you want to get it. All right, recap. Today, we had a pretty good day today. We were up 215 ticks on the NQ, 17 ticks on the Russell, 9 ticks on gold, and we're -5 on the ES. Put us at 1187.5 on the morning session. Today took 21 minutes, and 10 trades to get to $1,000. So that hurt the average today. We took a total of 38 trades. So On the month now, we're at $10,152 over 13 business days, averaging $780 per contract per 2-hour business day. So to beat June, where we took a week off in June too, but the week off this month, I don't know. We'll see how much more of an effect it has. But to beat June, so we don't have our lowest month of the year so far, we need to make. Well, we were at 15,000 there, so we need to make 48.50 over the next 4 days. So that's a pretty good average. I'm gonna have to have some good days here. It's gonna be better than today on every day. It's gonna be equal to or better than today every day to make that. Anyway, today it took 21 minutes and 10 trades to get to $1,000 a contract. $1,000 with 10 contracts. And we took a total of 38 trades. So on the month now we're $10,152. Over 13 business days, averaging $780 per contract per 2-hour business day. On the year, we're at $183,247, or 143 business days, averaging $1,281 per contract per 2-hour business day. Now, this number got hurt a little today because it took us a little longer, and we didn't get more than $100 per contract. But if you were to quit trading when you get the goal for the day, and you were to add 1 contract per month so far this year, you would be up $102,712, averaging $5,326 per hour. You would have only had to work 19.28 hours. Okay. All right, let's get into the actual trades. Most of the trades, as usual, were on the NQ, but we did have some here on the gold. And we'll go over those. You can see almost the whole day right here. This is the whole day in one screenshot. So we started out with the stop out on gold. We were minus 15 on that. Then we picked up 10 ticks there, got us to minus 5. Then we picked up 7 ticks, it got us to plus 2. Then 1 to 3, then 1 to 4, and then 5 to 9. And we ended up on the break-even trade right here. Let's see, was there anything else? That was too low, I think. That's why I didn't do it. Yeah, it was 1 tick below right there. I think that is why I didn't do that one. And then during the break, there were no trades during the break. All right, and that was it on the gold. So we took pretty much every opportunity on the gold except that one that ended up being a decent trade. This one? No. We took pretty much every trade here, and except that one. Anyway, I'm gonna minimize the gold, and now we'll go on to the Russell. On the Russell today, let's see. On the Russell, started out here with 15 ticks on the first trade, and then we stopped out on the second one. So we're plus 15 there, and went back to 0 on that one. Then we had a break even, and then we had a plus 12, then a plus 5 to get us to 17, and then a break even right there. Moving into the break here, we had a short there that I missed. Actually, no, that wasn't a valid trade. This had to go all the way down, so that was the one that I missed. Into the break, let's see. There was one long trade right here during the break that would have eventually worked out to be okay. There was another long trade right here during the break that would have been a good trade. So 2 trades during the break that would have worked out okay on the Russell. And we ended up on the Russell, we ended up with plus 17. Okay, in the ES, you can see all that red there. We were back and forth quite a bit on the ES. And we ended up negative on the ES. Our first trade on the ES was a minus 10. Then right here, we picked up 8 ticks to get us to minus 2. Then we stopped out again to put us to minus 12. Then we picked up 12 ticks in this really long trade right here. We picked up 12 ticks. When we finally got over here, put us back to 0. Then we stopped out again, put us at minus 10. Then we picked up 1 tick to put us at minus 9. Then we picked up 4 ticks to put us at minus 5. And that is where we ended it with that. Now, going through all this right here, there was a trade that would have stopped out. And that was it. Really, there wasn't much else going on in there. There wasn't much else going on in there. Hang on. Okay. And that was it for the ES today. Right, the NQ. Now, as usual, the NQ is where the majority of the trades were. Let me just do this and hit the back button because there weren't that many bars here on the NQ today, I guess. We'll go back to the beginning. Here we are. The beginning on the NQ. Let me get up the question box. I don't think that's open. There are no questions at this juncture. Okay, on the NQ, our first trade here on the NQ, we picked up 20 ticks. Then we had a couple of break-even trades. Then we had a 1-tick trade somewhere to get us to 21, and then we missed this really nice trade right here. And we grabbed this one for 45 ticks. That got us up to 66 because we had a 1-tick trade in here somewhere. And then we went from 66 up to 86 and a couple of break evens, and from 86 to 102, 102 to 106. And then we had another break even, and then we had, I think, and it went from 106 to 151. This was a 45-tick trade. So somewhere in here, we went from 106 to 151 on that one. Then we had a break even, and then we stopped out, and that brought us down to 126. And then we had a 24-tick trade there that got us up to 150. Then we had a 45-tick trade there that got us up to 195. 4 ticks got us up to 199. Break even. Then 16 ticks got us up to 215. And another break even. And that is where we ended it with the NQ on the morning session. Now, moving through the break right here, there was a short right here that could have been profitable, would have been break even or profit. The next opportunity was all the way over here. There was a shorting opportunity right here that would have worked out okay. Further on, there was a long opportunity right here that would have been a break even. This looks like it would have been a short right there that would have worked out. And this would have been a short right there that worked out. And this looks like it'd be a short right now that'd still be working for you. I'm just about stopping out though. And that was it for the NQ. We ended up with a whole bunch of trades on the NQ and plus 215 ticks, right? So for anybody who's just getting here right now, if you haven't taken a free trial, go to nq.com, click on the purple button. There's no credit card required for the trial. Click on that purple button. It's going to bring you to this registration page. Just fill out the page right down at the bottom. Gives you TradingView login ID. Click join webinar. Click join. And you'll be sent all the information you need to get into the room in the morning session. And I will get your indicators indicating for you on your desktop. Okay. For 5 consecutive business days. All right. Let me copy of that and move that over and hit that, and here do Control V, Control F, and Control V. Okay, and there. Okay. All right, so here we are, ready to trade. Sorry, I had to go through all that with you. And I don't know what I just did with the question box. So if anybody's asking any questions right now, I believe, here it is, I found it. Okay, good to go. So what we need now, we have a red background. We need to get into the overbought and come out of the overbought. Over here on the Russell, we've gotten into the overbought there. We need to get into the oversold. A red background here and a red background here. This down close back here was the last trade. It needs to go down into the oversold and come back out of it before you have any other opportunity there. Right? And you haven't had an opportunity here on the ES. And that's it. That is what we have right now for trades. Okay. All right, so if anybody's got any questions, we have 20 minutes left to answer questions and to place trades. You see right now, we're in the overbought. We're right below the midpoint. So this bar could be a trigger. It could hit the midpoint and close down and be a trigger. Okay. And there, it just hit the midpoint. So now we're looking for the down close on that. So this is how you play that, right? See where the top of the bar is, 78.75. You sell 2 points below the top of the bar, just like that. Because I know a down close is going to pull it out of the overbought, right? So if you get the down close, it's going to close right here at 77, and it should trigger me in pretty close to right there at 78.75. Okay, if we get that down close, it's going to go through 77 right here. Okay, and there it is. It just gave us a down close, went through 77, and triggered us in exactly where we want it to be. So the market's nice and slow right now. The DOM is showing a mix on the upside and downside, so we just got to go with what the charts are saying. The charts are saying it should go down, and it should drop down to 73.50. It should drop down to right here. Okay, that is what it is suggesting. Now the NQ, it needs to get into the oversold and pull back before you can have another trade there. Okay, and the gold needs to get in the overbought and pull back before you have another trade there. Okay, and that is all of that. So nothing here on the NQ that needs to get down to the oversold. We need to down close on this bar, and then we need to pull back and give us some opportunity. So in the bigger picture stuff that Dwayne was just talking about a few minutes ago, we're resting right here on top of the MA1, or red and falling. And we're going to get up above the all-time highs, which are right here, probably by the end of the week, definitely by the end of next week. And this level up here is what I was searching for on this next run. This pullback that we have right here is 50% retracement of this leg. So just using that information, using just that information, if you draw this to here, I'm pretty sure I've done this in the past, but if you draw this to here, and then you just shift that over here, yeah, that's pretty much what I said in the past. That's what we'll be expecting from this next leg length. Once we break up above the all-time highs, we just stopped out on the ES trade that we just took, right? That was this one right here. It was a valid trade. It just didn't go in our favor at all. But I would be expecting it to get up to here. Probably all-time highs coming up, and then beyond the all-time highs, we should get up to this level up here. Is what I'm thinking we got coming up on a daily. Okay, and all right. So we just wait. The markets have been, well, overall we did well this morning, but they kind of not really giving us a whole lot to work with right now. When it gets choppy like this, you can resort to more aggressive trading. Like this, all the markets are choppy right now, so you could use the more aggressive trading on all of this. Now, there's different levels of aggression that you can have here. Now, this long leg length that we have here on the NQ kind of disqualifies that one from the aggressive trading. But the chop that we have here and here and here, certainly qualifies. So to explain what this means, if I go out here and you go to trade rules and you scroll down to here, these are the different kinds of things. So the middle of the road one is this one in the purple right here, right? That means if you have a green background, anytime the blue leads into the oversold by itself, you just buy the open of the next bar. Okay, if you have a red background, anytime the blue leads into the overbought by itself, you sell the open of the next bar. Okay, so for instance, right here with the green background, right here with the green background, you would have bought the open of this bar. You would have bought the open of this bar. You would have bought the open of this bar. The open of this bar right here. Okay. You also would have bought the open of this bar, which would have stopped out. So those three would have turned into nice profit, and this one would have stopped you out. Okay. You wouldn't have any, well, I guess over here, nope, that was the blue and black were together on that. So you wouldn't have had any trades on the short side using that scenario. Well, maybe one. You would have had one right here. You would have sold the open of that bar right there. Okay. I did take one aggressive trade this morning. I think it was on the ES. Maybe it was on the NQ, but I think it was on the ES. Let's see. Yeah, this one right here on the ES. I got one tick on that. Okay. So right now on the NQ, we just need a down close. Get a high of 89.50. You'd be selling 85.50 right there on the down close. Is what you 89.50, 84.50. Sorry, 84.50 on the down close. All right. So being aggressive with the Russell, you could buy the open of this bar right here, right now. The blue just led into the oversold. Right now you have a little bit of chop going on right here. I'm sorry, you're breaking out of the chop a little bit. You have a longer leg length right there. But being aggressive with the green background, you buy when the blue leads into the oversold like it just did right here. Okay, so you go long right now. I already did. Go long. You go long right now. And then once it gets 5 ticks in profit, you got to make sure you bump your stop to break even. And so, if we were to get an up close on this bar, it would be a conservative long trade. But right now, you'd be in 9 ticks better, roughly. Well, the up close is going to be at 0.7. So you'd be in 6 ticks better. And the stop is still the same on these. The risk management is the same when you're doing these aggressive trades. You just got to make sure you're on top of it, though, because sometimes they can go really quickly. The NQ just gave a conservative short right there. Here's the NQ short. Here's the Russell long. And the NQ short's got to get down here to 83.25 to bump that stop. I don't think it's gotten that low yet. It has actually gotten that low, so I can bump the stop to break even on that. Now I've got to go find my other dom. Oops. So I go find my other dom. On that Russell, my stop should be a break even on the Russell. Hang on. Is it? Okay, hang on. I still gotta find my Russell. Oh, here it is over here. There it is. My stop should go to break even on the Russell, and the NQ, we're out of break even on the Russell, and the NQ has not gone to the point yet where I wouldn't move my stop to break even. Okay, so we're still short on the NQ. And we ended up with the break even here on the Russell, taking the aggressive long trade. It never gave you the conservative long trade. The Russell didn't. this window I was on top and do that with the Russell too, like I say. Do that everywhere. All right, so the NQ now needs to give us 10 ticks in profit. It needs to get to right here. I think that's 8, 9, 10. It's getting a little bouncy right here all of a sudden. It's like there's a little bit of action going on. A bit of a spread. You see that? No, I really thought that when the European markets closed today that the US markets are going to wake up and start doing something. Look at this. 1, 2, 3, 4 bars in the middle. That's unusual. We're right in the middle of all the chalk that's happening right now. There it goes. Stop to break even. Okay, so we've broken below the chop. Now we need to get down below the swing low right here at 80.50. If we get below 80.50, we should have a really nice trade on our hands. It should be like this big right here. This is the leg length. So it should be this big right here. It's probably going to take me out of break even right now, but this is what it should go down to right there. 74. And 74.50 is where my target is. And it just took me out of break even. Anyway, that's what it should do. All right, so we got a break even there. We got a break even here. We got a minus 10 on that one. The gold is not giving us anything yet. And now that we're in chop here, we can put this on, and we could have taken an aggressive. No, actually, that would be super aggressive. Yeah, we ended up with a break even there and a break even over here. All right, the conservative trade actually did trigger right there on the Russell. Also, finally, this up close right here would have been the conservative long trade. Okay. Does anybody have any questions about any of this? So far we had a break even aggressive long trade right there. So I'll do a different color yellow on that. We had a break even conservative short trade over here. And that stuff up there. And gold hasn't given us a thing yet. So now we must just sit and wait. All right. Well, there's a chance on the NQ for a conservative long trade here on the NQ. And up close there on the NQ would be a conservative long trade. Okay. And this up close over here on gold is actually a conservative long trade as well. So you got a conservative long trade on the Russell. You got one right now on the NQ, and you got one here on gold all at the same time. So the aggressive trade didn't pan out over here. It just didn't happen. And it doesn't look like it's going to happen here on the ES either. So let's just get rid of all the aggressive stuff. So you can just focus on the conservative trades. All right, It is 1:25, so we have 4.5 minutes left here. 4.5 minutes. Okay, that did not work. This one here, well, we took the aggressive one over here. The conservative one we didn't do, but it's still kind of messing around in there. The gold, we didn't take that one here. The gold we're not positive on yet, but we did take the gold. That was a conservative long trade there. We actually got a really good entry on it. Okay. Now, make sure that's always on top. It is. If you have not taken a free trial with us, it's 126. I'll tell you in a minute. Go to mytradingIQ.com. Sign up for the trial. These markets are really tough right here. This is definitely one of those days where you want to quit after you got the goal for the day. There were some nice trades that I missed early on that other people got, so they were able to get their goal for the day and quit way before I was. All right, the goal is starting to come to life here. It's got to get up to 0.7 to break even on this. It's almost there. One more. There it is. So we can go to break even on the gold. I'm going to lock in just one tick so we don't have another break even. And it looks like the NQ is about to hit the YBR and flip the YBR around, so you have a red background, and we're out with just the one tick on the gold. Wow. Choppy. Nothing there. All right. I don't know, guys. It doesn't look like we're going to do another trade here. It is now 129. So I'll just do this. Today we ended up with $1,187 a contract. All right, plus 215 on the NQ, 17 on the Russell, 9 on the gold, and minus 5 on the ES. In this session, we picked up one more in gold, minus 10 on the ES, break even on the NQ, and break even on the Russell. But overall today we're up $1,187.50 on the morning session, 10,152. This is with one contract. On the month and on the year, 183,247 on the year. Right. If you haven't taken a trial, go here to mytradingIQ.com, click on the purple button. There is no credit card required for the trial. Just click on that purple button and you will be sent everything you need. Actually, click on that, you'll be sent to this page. Fill this out, gives you TradingView login ID down here, and then you'll be sent everything you need. Get your indicators indicating on your desktop and to get into the room in the morning session. Okay. Oops, didn't need to do that. And that is it. With that, we can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready, it looks like he is. Almost ready.
Yep. Recap of the morning session.
Today, it was a little more complicated than normal. Today, it took 21 minutes and 10 trades to get to $1,000 per contract. I'm sorry, $1,000 overall. $100 per contract.
Good job. We'd hang in there.
Thank you. Thank you very much.
We'd all like to do it every day on the first trade, but that's not the truth about trading.
It is not, indeed.
So don't wake up with that expectation, because if you do, you're going to be disappointed a lot of days. If it happens, that's awesome. You can go about your business, go about your life. You got to stick around and work a while. You stick around and work a while. That's the deal. All right. Well, great job. Way to hang in there.
Thank you.
And guys, we made it through all the markets. While Michael's here, I'll show him real quick what I meant about flat. That's the ES. The vertical line, of course, separates today from Friday. We had this big move up on Friday, and now today. And these are last week's zones. Just flat.
Yeah.
And then if we go to the Dow, well, actually that move to the downside, guys, remember I said we were going to head to that 50% fib retracement, most likely.
So, we're going to be getting pretty close to it right there.
Yeah, we still got a ways to go.
Yeah,
down here.
Yeah, 50's way down there, I guess, yeah.
Yeah, we're approaching the 38, so. And then the Russell, more flat, and the 50's down in this area. And on the NQ. Actually, the NQ, we bounced back up to last week's zone at 23,615. It was, after Powell finished speaking, that was the resistance on Friday. And then after the retracement and one final push, that was the resistance on Friday. And now today, that's been the resistance. It's the carryover power of the zones. So now we're getting a pullback to the BBC. The step lines cross, blue and climbing. Pullback holds more often than not. I wouldn't call these necessarily normal market conditions. I'm really thinking a 50% retracement.
We almost got it with that.
We almost got it with this low right here. Although that doesn't take in the low to high on Friday. If I do it the way I did it at the beginning of the broadcast, I did it like this. I went from Friday to low.
Yeah, that's going to bring it down some more.
The Friday's high. Yeah, that puts it way down here.
Yeah.
So, yeah, just quiet sideways consolidation. I'd be surprised. We're getting the bearish cross right here. Step lines crossing blue and climbing, so we get a retracement. Maybe we get a bounce, maybe we don't. We'll see. The shallowest possible fib retracement, we've already taken out the 24. Then we got back above it. So now that's another potential support. And on the daily, we've not, and I don't foresee us taking out Friday's high. Friday's high was 96 and a quarter. Today's high, 94. So we missed it by 2 1/4 points. We're building a red candle coming down, and red and falling is actually support because of the way price is approaching it. If we trade through red and falling, then same thing with the step line, then the daily BBC. But this has been one long rally. And to keep this market healthy, we need to see at least a 24% retracement, which put us all the way back to 61.24. So anyway, To become a member, just send an email over to support@cfrn.net. Let Valerie know you'd like to become a member. She'll send you all the information you need, including a link that you can click to make your payment to become a member. Now, once you become a member, she'll send you several more emails. Some of them you won't even understand what she's talking about. That's okay. Remember, this is not a get-rich-quick scheme. This is a journey. You're actually learning how to trade. Once you learn how to trade, that's something nobody can ever take away from you. So it's not going to happen overnight. Just take the email she sends you, and in your email client, create a folder. Put those emails in that folder. And as time goes by, there'll be a need for every single thing she sent you. And you'll know right where it's at. 2 hours of live training every trading day. Private one-on-one mentoring at your request. The strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Stocks, futures, crypto, Forex, ETFs, it doesn't matter. Price flows the same across all markets and all time frames. Support, resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. That's why it's so important that you use the Logic 247 alerts to learn how to read the chart so that you know where to expect potential resistance and where to expect potential support. Now, over the last 20,350 plus alerts, we've averaged on a weekly basis 20% or less being stopped out based on simple market structure. In other words, 20% of the time, the market is going to do something other than the next high probability thing, what you expect. So don't let that rattle you, don't let that shake you, and stop chasing that holy grail where you never get stopped out again, because here's the truth. It doesn't exist. Can't exist. As a passport holder, you'll get the Logic 247 alerts around the clock, the concierge trade alerts the second they're published each evening, typically 5 minutes before the Globex open. Monday mornings, you get the weekly trading zones at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change. Thursday afternoon, you get an invitation to attend the members only workshop Thursday night at 8 p.m. Eastern. And last but not least, when you become a passport holder, you get the golden keys that opens all the private channels in Telegram. Now, as a trial member, you have access to the public channels. But once you actually become a member, then you're going to have access to a whole bunch of private channels. During your trial, you'll be able to communicate with our current traders. Most places don't let you do that. Wonder why? We encourage it. Everything a trader needs, all under one roof, one low price. It all starts here. If you're new, go to mytradingiq.com, watch the videos, read the content, then send that email to Valerie. Support@cfrn.net. Let her know you're ready to become a trader. Okay. All right. We'll wrap it up with our good word for the day. Called to overcome. Yet in all these things we are more than conquerors through him who loved us. Romans 8:37. Have you heard of the principle of supercompensation? Pastor explains, when an athlete is pushed beyond the threshold of pain and exhaustion, the body overcompensates. The more a muscle is broken down, the more it builds back up. The 206 bones in the body are constantly going through a process called remodeling. They are being broken down by osteoclasts and built back up by osteoblasts. The process of remodeling is intensified when a bone is actually broken. Extra osteoblasts help rebuild the bone. There is a period of weakness where the bone is more vulnerable to re-injury. That's why we wear casts. But eventually the bone ends up stronger than it was to begin with because the body overcompensates. Very rarely does a bone break in the same place twice because the bone is thicker and stronger than it was before the break. Almost like a broken bone that needs to be reset. God breaks us where we need to be broken. He fractures the pride and lust and anger in our lives. But He does it to remodel us into His image. And once we heal, we end up stronger than we were to begin with. Paul writes in Philippians 1:29, "For it has been granted to you on behalf of Christ to suffer for Him." The word granted comes from a Greek root which literally means to grant a favor. We tend to see suffering as a necessary evil at best, but Paul calls it a divine favor. So maybe God is remodeling you. Perhaps the problem you thought you would never overcome will become your most effective ministry to others. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.